significant economic effects, even if tariffs stay close to the currently announced levels. They are staying the course, aren't they? Steady hand.
At this point, if they flipped as frequently as some of the policy proposals did, they would be accused of reacting quickly at a time when policy is uncertain. It takes a long time to get to the economy. If they don't give some sort of guide, then there's a question of what forward policy and the sort of tool that they have, given that communication has been so instrumental for them, about what kind of value that has if they're just saying wait and see over and over again. So they're between a rock and a hard place. Key question that I have is how quickly will some of the effects, the significant economic effects, as Adriana Kugler said, make their way into data that people can rely on? And that's going to be increasingly difficult to tell.
The good news for the Federal Reserve is they only have to put out a forecast every quarter. That's the good news for them. A lot of people on Wall Street do not have that luxury, which is why we see them marking to market or marking to trade negotiations every single week.
This morning I came in and I saw these notes piling up and I thought, here come the revisions. And it's revised in every single different way. End of year S&P 500. Expectation for growth, downgrading inflation, other people upgrading their inflation forecasts, other people talking about how maybe they should sell here because all the good news has been priced in. So everyone's revising, trying to get a handle on something that we're not going to get clarity on in 5 minutes' time, but we're going to try.
Jonathan Pingler, UBS, said the change in tariffs could imply around 0.4 percentage point additional GDP growth this year and potentially a little boost to next year too of 0.2. So that's the direction of travel. Up next, CPI data and reaction from Tiffany Wilding of PIMCO, David Kelly of JP Morgan Asset Management.
CPI. Let's see what CPI's got for us today. Okay. Realistically, we've just got to wait for something to happen. But so far, it's alright. Nothing crazy.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Alright, news is here. We're getting a push up on gold.
Inflation data in the United States with equity futures almost totally unchanged.
Dollar's coming down,
500 on the Nasdaq positive by 0.1%,
which we do expect or would like to see for today anyways.
The scores in the bond market look like this: the 2-year, 10-year and 30-year.
Okay.
The yield to lower. We're down by 3 basis points on a 2-year. We're down by 2 on a 10-year to 4.44. With your inflation data.
So inflation data not good.
Good morning, John. A little bit
I want to see at some point EU go for yesterday's session highs. This is New York sessions high as well. I'd like to see us go for that at some point. For gold, I'm waiting to see really for gold, to be honest. I'm waiting to see for gold. If gold can, one or the other, you know, like I posted in the morning breakdown, if you will, you know what I mean? If gold's going to react from here and then drop, fine, so be it. But obviously, we got that gap here. I'd prefer for us to get up here first, right? If we look at gold on the daily, you can see that gap quite clearly. Now, we don't have to necessarily get up there, but I would like this low to remain intact, at least for now. But if we do start dropping lower, then we can just start to look for some shorts. Not even waste time with that.
0.2% on the S&P going into the print. Totally unchanged on the Nasdaq. We're up by 1/3 of 1% now. If you turn to the bond market, 2-year, 10-year and 30-year, seeing yields fall, down 5 basis points on a 2-year, down 4 on a 10-year. So the yield on a 10-year maturity is 442.56. You know the rules coming into this. The rules were as follows. If the number was bad, ignore it. If it's good, it's really good.
Well, right now, on the margins, you could say that disinflation in a couple of industries could potentially give the Fed a pass to cut rates sooner, even if the pain isn't as great. This has been the argument that Peter Scheer made, that you could actually see 3 or 4 cuts still, even without that downside of recession, and that seems to be...
Yes, Gift, how you doing, bro? Money day, money day.
Peripherally from this data, that doesn't really matter, but maybe people will think absolutely does, and that's what they're trading on.
How long is it going to take to get a clear read, a clean read on the US economy?
It's a great question. I don't know the answer to it. I think nobody does. And that's the reason why they're looking under the hood, just like Michael McKee, to try to understand the details. To see if
you know, one of the worst ways, well, I wouldn't say worst, but one of the ways that I don't like markets to open or to start the week is what we've kind of seen already. You know, a lot of volume on Monday. You know, we even had a gap on the rollover on Sunday, right? I don't like to see this type of price action, because then it means, you know, Tuesday, Wednesday, you don't know whether it's going to be muted or it's going to continue, right? And even if price starts to rally back up, you don't know with a high degree of accuracy how high it's going to go, right? In terms of how we closed last Friday, I knew this push up was just manufactured. Like, we'd pretty much returned pretty straight back to where we shorted from on what was that, on Thursday, after, you know, we fought with price all the way through Monday, Tuesday, Wednesday, finally got the short on Thursday, and then Friday we pull all the way back up, you know. I wanted to hold from Thursday all the way till now, but of course I had to take profits earlier because we had this wick up, right? So essentially the move is complete anyways, but you know, when you turn your attention over to the daily, we filled out a lot of that imbalance already on the daily money day mark. We're reaching areas where it's like, cool, we could actually start to, you know, push back to the upside. So I'm trying to see what, you know, EU, mainly gold today, to be honest with you guys. I'm going to look at the stock market as well later on in the day. I'm going to start looking at the stock market a little bit closer now. I was able to catch a long inside of here yesterday. It was a pretty decent long, and we'll keep looking at the Nasdaq. So
States.
Yeah, right now I kind of just want to give markets a chance to just breathe, see what CPI is going to do. For gold, there really isn't a clear area that I want to work with. I'm going to work with price and with volume and see what we're doing, especially come, you know, NYSE and whatnot. And then we'll be able to make a decision based off of that. But for now, EU, I'd still like to see EU head higher due to the fact that I want to see the DXY pull back. But to be honest, when we look at this news right now, right, we've got a pretty nasty wick that's just taken out the low. Okay. Thing is, if we start to see price rally for these equal highs, looks like it may do so. Right, we may see a continuation higher. So let's just bear that in mind.
Towards normalization after, after the pandemic-related shocks. Inflation was elevated. It's remained elevated.
Let's chop on EU. Let's take a look. GU. Yeah, G's just been pushing up. It's not really the best of price action. See AUD USD. AU for me is the easier sell than EU or GU at the moment. It's a much easier sell. It's pulled back a lot higher as well. AU, you know, if we look at this high to this low, we've had a pretty significant pullback that looks around 71%, maybe 78%. See if I'm right. Yeah, we've pulled back around 71% here on this swing for AU. So it's a much easier sell on AU than the other majors. The daily pictures as well looks pretty good. Obviously, we're pushing very high, but yesterday's candle, how it closed, we took out this high, we engulfed the low, so it looks pretty good for us to stretch lower. But we'll see, we'll see, we'll see.
Well, certainly we've seen a fall in gasoline prices. I think the interesting thing is if you look at U.S. gasoline and other U.S. energy prices, they have not fallen as much as global oil. So I think it'll be maybe a little bit less disinflationary, than if you're just looking at oil prices. But you will get some benefit from that. I think
I've noticed that there's been a lot of moves happening a lot later on in the day. There seems to be a lot of manipulation during the daytime. So swings of highs and lows, and then because for yesterday I was looking at NASDAQ for whatever reason, right? We had the drop on the open, we had the manipulation, this looked like a really good, nice buy, accumulation after taking out this low here. It looked good to push up, and then boom, we take out the low one more time, right? Then price set up this sort of almost a sell setup, right? Before eventually reversing, taking out the high, took a small pullback there, as you can see by my red line. And then I think I closed profit around here.
Inflation come down there much slower than many people were expecting is because you had this offsetting inflow. Now, obviously, that force is waning and potentially even reversing, so that could result in some faster deceleration near term in some rental costs. But I think ultimately the longer term outlook there is for stickier housing costs as a result of some of these tariffs.
John pointed out that we're all kind of tying ourselves in pretzels as we try to get all these counter forces together, whether it's the immigration story, whether it's the tariff story, whether it's what the economy was heading into all of this. He also asked me, and I had no answer about when the data would be clean, when we would get actually something that we could rely on. So I will ask you, at what point do you think that you can see sort of the new normal in the data, or is that not really going to come back? Are we going to have to watch these trends sort of in parallel fashion and try to compile a picture?
Well, I think that the new normal is, I think we're quite a ways away from that. I think the bottom line here is just that taking a step back from the headlines and things like that, the average effective tariff rate that we calculate as a result of these trade policies has increased more than any time in a century. That is a dramatic economic shock. And it will take time for that to flow through the system. And we aren't going to see the quote unquote new normal on the back of that, we think, for quite some time. When I say quite some time, maybe a year or more for the economy really to adjust, assuming these tariffs stay in place. So, I guess to settle in and let's see what happens.
Do you think you have a best guess right now? Any kind of guess, any kind of take whatsoever on the nature of that shock? Tiffany. I get that it's a policy shock, but is it a inflationary shock, a disinflationary shock, a growth shock, a negative supply shock? What kind of shock is it?
Well, I think it acts like all of those that you mentioned. And I think the bottom line is because we haven't seen the type of policy like this in quite some time. We don't exactly know how it's going to filter through into the economy. Again, we have a best guess about that, which is that we think you will get some price level adjustment that occurs because firms have to pass on the additional costs of tariffs, and they will do so eventually. That will result in a real income squeeze because you don't see wages adjust as quickly. We ultimately think over time wages could adjust, but during that real income squeeze, that just means that real consumption, is hit by that. And there's some knock-on and second-round effects from that. As volumes start to decline because prices are higher, then that just means you potentially need to hire less people. You'll probably get some margin squeeze. It could be detrimental to investment trends in the United States. I think the magnitude of these things and how they play out over what time frame, I guess is really the question here. And then how inflation expectations adapt to all of this. I think the real concern from the Federal Reserve, for example, is that we've come off of a period of elevated inflation, and having another shock that should be a one-off sort of temporary thing can result in inflation expectations drifting higher, can start to creep into wage negotiations, and can result in more persistent inflation. I think that's what the Fed is concerned about.
Tiffany, appreciate your take as always. Tiffany Welding there of PIMCO. Speaking of inflation expectations, you, Mitch, inflation expectations, and update another read on that on Friday. If you are just joining us, welcome to the program. Moments ago, CPI, small downside surprise year over year, 2.8%, the smallest increase since February 2021. Mike McKee, how much comfort can we take from the smallest
Gift
increase?
says we're dropping a bit on the DXY. Yes, okay. Okay, cool. Let's see some of these lows get taken now for DXY. Thing is, if we start to drop, right, then it's a lot easier for us to just look for pullbacks and try to ride this lower. Right, we got a really nice range here. Really, really nice range here. So because realistically we went from low to high to low. Right, we could technically return all the way back down here. It might take a while to get there though. We could potentially start looking for some longs here on gold. Maybe. I mean, look, I'll tell you what, so far, it's okay. You know what I mean? We haven't really done much. We're still watching price. So we'll just go from there. I do want to just listen to Bloomberg for a little bit, though.
But today, obviously, it's the tariff news. But also, I think the other big part of the inflation story going forward is the fiscal stimulus that's beginning to emerge on Capitol Hill. Because what it looks like is, okay, the tariffs aren't here and consumers are relatively quiescent right now. I mean, we're not seeing a lot of enthusiasm there with airline fares and so forth down. But it looks like they're cooking into this bill stimulus for 25, 26, 27, and 28. They're implementing a lot of the president's promises on the campaign trail in addition.
Gift said he had a long from 32, 38, but came out just before CPI. Probably a smart decision, bro.
6, helped by fiscal stimulus, and perhaps even later in 2025. That'll keep inflation.
I want to see if this really wants to go for it or
This is
not.
good news in inflation, but I think the signs are that inflation is going to move up in the short run because of tariffs, and then in 2026 because of renewed fiscal stimulus.
David, is that a reason to be bullish the equity market?
Probably not. You know, I mean, the equity market is hard. I don't know exactly where we are right now, but it's hardly down year to date. And I mean, we've done a sort of a round trip on tariffs here, but we still end up with a higher tariff rate than we had at the start. I think we've got slower long-term economic growth. So in some ways,
I like the look of this 5-minute candle, how it's printing.
And I think it may be a little bit overdone.
Looks pretty good.
I'd still caution people, you know, longer term, the huge premium that U.S. equity prices have over the rest of the world probably isn't justified. And so I'd still be in the diversification
GDX is
camp
up pre-market.
I do think there's, you know, a 10-year Treasury yield at 4.50 to 5 is probably more reasonable than a big.
More look to start to buy gold at this 2-minute pullback here.
Really bullish about equities because of fiscal stimulus, because, you know, we're talking about a full employment economy where the Fed's going to have less reason to cut.
We've been struggling
DXY is
with
dropping.
whether this really is the beginning of the
Got
return
about
to the
70
United
pip.
States and the dialing back of some of the loss of U.S. exceptionalism types of narratives, or whether this is just a pause in the.
See if we can take out that high there.
David, you talk about diversifying. What does that mean if you think that 10-year yields are going to be in a 4.50 to 5 range, and you don't really find
Got 15 minutes to the new owl candle.
Right now?
Well, it does mean international equities. I mean, yes, the U.S. equity market has almost done a round trip year to date, but European equities are up very strongly. International equities in general are up strongly for the year, and the dollar is down. I think that will continue because, you know, we will still end up with significant tariffs at the end of all of this, even though we're seeing, you know, it's calming down. We're going to end up with higher deficits. We're going to end up with lower immigration, probably lower economic growth. So. I know, you know, this is a package, an agenda that the public has voted for, and that's why we have elections. But it does suggest a slower trajectory in U.S. economic growth with higher deficits, somewhat higher inflation in the short to medium term. None of that is really very pro-U.S. And the thing is, you know, I think the U.S. will do okay, but does it deserve to be, you know, a 50% premium over the rest of the world in terms of PE ratio? So I'd say international equities, yes, and then also alternatives. You know, just if fixed income is not going to help you because of higher inflation, alternatives, there are plenty of alternatives, things like infrastructure, transportation, real estate, which have a degree of inflation protection. So I think people just need to broaden their definition of diversification in this kind of environment.
You mentioned the Fed's response, and this has been a subject of a pretty heated debate, and frankly, it feels like people are bifurcated on just.
So I'm just going to take a little small position here, yeah,
cut rates just
to start things off this session.
Incentive. From your perspective, is this more of a reduction in potential inflation in terms of the lower tariff rate than it could have been that gives the
Let's
Fed
see how that one
more of an ability
goes.
to cut rates without a recession at a time where the data that we just saw, albeit messy, does point to.
Like from looking at this, I do think gold needs to push higher.
Well, yes, but the Fed's target is.
We even had a little pullback there.
The
dollar.
I think Jay Powell put it pretty well at his latest press conference. You know, they're going to have to look
bad.
at where they think inflation's going, where they think unemployment is going, and I think the both fiscal stimulus that is beginning to emerge from Capitol Hill, and then also a somewhat lower tariffs, they suggest that the risk of recession is receding here. I think you've probably just gone below 50%.
There's a chance of a quick continuation on EU from here, you know.
The year 4.5%.
It's a really, really quick one.
But the CPI, the consumption inflation could easily end the year above 3%. In fact, it probably will. So we're probably going to be further from the consumption deflation target than from the unemployment target. In that kind of environment, there's not much excuse for the Fed to cut at all, because we're at fairly close to a neutral level. So I think the Fed will take it very easy here, and it's part of the story is tariffs, but the other part is putting more fiscal stimulus.
Let's see what gold wants to do here.
Really doesn't give the Fed
See if we can get this little play.
Is your base case no cuts now, David?
No, not quite. I think we will get at least one cut this year by the end of the year. I think the Fed realizes they can edge rates down a little bit, but I don't expect a cut in June. I don't expect a cut in July, to be honest. I think they'll want to see much more of much more certainty around what the tariff really
quick
is
little,
and how much stimulus.
Quick little run for that high.
In this bill before they contemplate any
slightly
cuts.
aggressive
So I think
entry.
some time for the first rate cut.
Interesting. David Kelly there. of JP Morgan. David, good to see you, sir. As always,
Let's see if we
my
can
takeaway
get that
from
one.
Conversation is how the attention has shifted very quickly.
Obviously, if we get to the new hour and we haven't moved, then we'll have to look at that again.
Is as simple for the bond market. The idea of
Let's see what gold wants to do. I think gold's almost at the buy limit.
some of the proposals. Is it going to be other Republicans or is it going to be
it's at
the
the
bond
buy
market
limit
of all
now.
people? And that was Peter Shear's words. I'm copying them.
Is it going to
But a lot of
activate?
people are waiting for that ramification.
I think my words, actually, Bramo, not
Oh,
Pete's. Yeah,
I
yeah, I'll take
apologize.
that.
Okay,
I'll
please.
take
They're
that.
Jonathan
Thank you.
Ferr's
Thank
words.
you.
They're
Let's-
fantastic
Let's
words.
put that on the record. Very special, important words. 2-year yields are down by a few basis points this morning. Down 4 on a 2-year. On a 10-year, we're down by about 2 basis points to 445. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara. Hey, Yahara.
Hi, John. We start by recapping the latest economic data. U.S. consumer prices rose less than forecast in April. Core CPI
Officially
rose
tapped in.
0.2% from March, lower than the expected rise of 0.3%.
15-minute candle doesn't look good.
Inflationary pressures are limited, but remain at risk.
But let's see if we are onside or offside on this setup here.
Of higher tariffs. Meanwhile, the U.S.
TP is about 70 pips.
$12.5 billion in travel revenue this year.
So we'll take a look at that.
Travel and Tourism Council telling Bloomberg visitor spending is estimated to fall 7% versus a year ago. The decline in tourism is attributed to a strong dollar, some lingering COVID-era travel requirements, and a negative view on President Trump's America First rhetoric. And Apple wants you to be able to control your device with your thoughts. According to the Wall Street Journal, the company is taking early steps to allow people to interact with their iPhones with neural signals captured by brain implants.
That's crazy.
Synchron, which makes a stent-like device implanted in the brain's motor cortex and is able to read brain signals.
Able to read brain signals. Wow.
Yahara, thank you. Appreciate it.
I knew you were going to say that.
Honestly, some of the technology out there these days. This could be used in really great ways, by the way. And we talked about it with regards to Elon Musk.
Dollar's flying straight back up there, boy.
This could be absolutely fantastic. For everyone else, this is just going too far, isn't it?
Sure, if you've had a stroke and you want to be able to communicate in a way that you can, fantastic. We highly support.
Gold is still holding though.
If they don't have our
But
brains enough
he's
in
gone.
the scroll features and the suggested headline features, they need to actually take control
Let's
of our
see.
brains. I mean, what more can we possibly do with this thing?
Manipulate it and all of that stuff. No, want nothing to
Enhance
do
it.
with that. And then sell you ads and okay. Up next, we'll set you up for the day ahead from New York City. This is Bloomberg.
The one move I'm literally looking at is this gold one. We'll see if we do get a play. Obviously, we've had a slight test here. We've dropped, pulled back from there. So I'm anticipating if we can actually get a push up from here. I'm not liking how the 15-minute candle is printing and the half-hour candle is printing. Obviously, we're a few minutes out from the new hourly candle. But again, like I said earlier in the session, we'll probably just get better moves later on in the day. That's just what's been happening as of late. You know, if you look at last week, you look at, yeah, we got a move there around 3 p.m. We got a move there around, what was that, 4, 5, 6, 7 p.m. here on Wednesday. So, you know, just not burning myself out this morning for the session. So we'll just take it easy. Besides, gonna do a quick stream for you guys and then look to lock in a little bit. Gift says, I'm waiting for a pullback, but I doubt I'll get one at this rate. I mean, we'll see, bro, because right now it's like, cool, you know, we're, like I said to you guys earlier in the morning, right, we're in an area where we can get a short from, right, in terms of gold, because this low here is the overall target. I want to see us take out this overall target. Obviously, that's target B. This is target A, right? I want to see us take out some weekly lows, okay? Now, whether we get that from here is the question, you know? And there isn't enough data or evidence for me to say with a high degree of accuracy that we're going to short off from here. So I'm playing the market for now. Just playing the market. That's all what we're doing. Even how these candles are printing is not great. But I'm in this, so I'll just sit in there, see what happens, see what he's doing. He's had a pretty nice drop lower, okay. Let's see.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
I like how gold is holding this level so far, at least, you know. It's not rushing to hit stop, so we'll see.
The opening bout just around the corner, 35 minutes away. Equity futures on the S&P just about positive. Your day and week ahead look like this. Later on today, President Trump, of course, in Riyadh for the first stop of his Middle East.
Thursday. Big one. Big day on Thursday. Trump's in Riyadh. Interesting. Wonder what he's doing there.
President Trump heads to Abu Dhabi, and on Friday we get another read on UMich consumer sentiment. Just to wrap up this morning, small downside surprise on CPI, but attention started to shift to the tax bill down in Washington DC. The bond market maybe just starting to pick up on some of this.
A real question here about which is going to take precedence at a time where a lot of the data is become so messy that it's to be rendered useless. So how much do people have to look at forward-looking policy and what actually does get done in Washington, D.C.?
That conversation will continue tomorrow morning. Coming up tomorrow, Victoria Fernandez across Markway, Liv Blanco, Kate Moore of City, and Lindsay Rosner of Goldman Sachs. From New York City, thank
Thursday, we've got Fed speaking. We've got initial jobless claims. We've got a lot of data. We even got the GDP to come out for the pound as well. So there's a couple of bits and bobs.
Welcome back to another special Italian Open update for Bloomberg TV and radio from Tennis Channel. So far, so good for Yannick Sinner. The world #1 has played 4 sets and won them all on his return to the ATP Tour. Monday, the Italian delighted the home fans as he dispatched Jesper de Jong, extending his current win streak to 23 matches. And don't forget, you can watch all the action live daily on Tennis Channel.
The countdown is on. Everything you need to get the edge.
DXY is dropping.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Literacy is a big problem in the United States. I think 14% of adults are functionally illiterate, which means they can't read past the 4th grade level. That's a large percentage of the population.
That's crazy.
Nothing the Library of Congress can do can completely solve that problem. But
14, was it 40%?
Read in this country?
Hold on.
People have another problem called illiteracy or illiteracy, which means they can read, but they don't choose to read. Called literacy in the United States. I think 14% of adults.
Oh, 14%. That's not that crazy.
Often asked if I'm listening to a book, are you reading? Does that count? But there is a concern that the amount of reading, actual text that people are doing, is diminishing. And so how do you work?
So right now, gold is very weak. Right? Look at these candles here. Whilst DXY has been coming down, gold has just been holding and slowly coming up. We're getting very low volume. Hold on, let me turn this down a bit.
People are using public libraries as opportunity centers, and libraries are.
Right, we're getting very low volume push from DXY, and we're getting very high volume drop on gold. So right now, realistically, in order for gold to turn around, we need like some seriously low volume, right, on DXY for gold to push up. Because right now it's just coming down. Let's see, if we engulf this low, we engulf this low. We've got the new hour in 1 minute. Ooh, new hour here? Eesh. Yeah, man, it might get stopped, to be honest with you. Let's see what EU's doing as well. EU's back up. Looks like we've had a play into this imbalance here as well for EU. Gonna mark that out just in case. Does look like it's ripe to continue pushing, you know? But we're just not getting any reaction from gold. Let's see. We've got a sizable SL, you know, 70 pips. It's quite a big SL, so it's not big. It's a decent SL, so let's see. Let's see how it does. Alright. New hours here. Thanks to my alarm.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
A positive surprise on CPI. U.S. inflation comes in lighter than forecast for the third straight month. That data giving stocks a little bit of a boost this morning. And Goldman Sachs lifts its S&P 500 target, but remains cautious due to lingering uncertainty. Plus, we are live in Riyadh as the focus of President Trump's deal-making shifts to the Middle East. Katie, what stocks are you watching?
I have my eyes trained on United Health. It's plunging right now, down 10%. That's after it suspended its outlook for the year. The insurer is also naming board chairman Stephen Hesse as its new CEO, replacing Andrew Liddy. Matt, this is another boomerang CEO.
Yeah, very interesting story. We're going to dig deeper into that. We're also watching Coinbase jumping after S&P announced that the crypto exchange will replace Discover Financial in the S&P 500. So, Katie, a real changing of the guard.
Let's get back to one of the big stories this morning, and that is CPI coming in cooler across the board.
Gold's reversing a little bit.
Now, before the data was released, Citadel founder Ken Griffin
It's a good push. It's a good push.
One of the reasons that Trump won the election.
It's a good push. He's now at target.
They wanted a break from seeing their
It's a good push.
deteriorated by the ever-increasing price of goods and services. And so I really do think that the president needs to think long and hard.
Still got a little bit more to go. And to be honest, this 5-minute candle looks very, very nice. We could use that at a later date. This whole area here. Right? This whole area here can be very useful to us. Let's see what the DXY looks like. Yeah, I like how this 5-minute candle is printed so far. Gold's still, you know, one small push up on the DXY, gold just drops. So I'm just gonna sit in gold for now. Gonna keep an eye on EU as well, because this play here looks very nice. This looks like the formation of a continuation model. Yeah, so potentially what we could get, okay, is let's just say we rival these highs, right? Let's say market pushes up, we don't take out this high, okay, and we start to get a pullback. We can then look to buy to then take out the equal highs that market is, well, should form. Okay, so if I do a preemptive strike, if you will, right, and we put stop, it's about 13 pips. So 1 to 2 will take us to about 573.
The big number of the morning that the president is going to be touting. This is probably going to even be bigger than any kind of business.
Let's see how that does.
In Saudi Arabia, egg prices down 12.7% in the month of April.
All right, Mike McKee, I'm looking forward to seeing that play through into the retail price that I pay at ShopRite. Mike McKee there, our international policy and economics correspondent. President Trump's first day in Saudi Arabia is already making headlines. The administration reaching a deal to grant Saudi more access to advanced semiconductors. This deal allows the government to buy chips from companies like NVIDIA and AMD, despite its ties to China. Bloomberg's Tyler Kendall joins us from Washington with more. Tyler?
Yeah, hey Matt. Well, as you mentioned, this is still being finalized here, but we could expect the details of this deal
to be announced as soon as this week, according to people familiar, as President Trump makes his way through the Middle East. The plan would give Saudi Arabia more access to these advanced semiconductors, but does come amid concerns from the Trump administration that the technology could fall into Beijing.
I really, really, really dislike this price action. I really dislike it, man. So far inside of here, seems like we've tested this 30-second candle here, created our high, so I'll go from this low to this high. If I use the fib from swing high to swing low, we've had about a 78% retracement, so it's like I still do like this to push up for gold, but it's really choppy, you know. It's really, really, really choppy. But let's see if this can continue higher. I really do like that candle, you know, guys. For both EU and the DXY. Let me see what it looks like on these other pairs. GU. Okay. Let's take a look at AU. Okay. It's not bad. It's not great, but it's not bad. Alright, so with the new hour, could go either way, to be fair, this new hour. Could go either way. Yeah, look at those 15-minute candles, boy. Yeah, there's just not a lot for us to work with right now. But we're in the gold buy, so let's just sit and wait. So we want to have a little pullback here, see if we can get a continuation. See if we can drop from here. Okay, getting a push up.
Let's switch gears now and get back to United Health Group, because shares absolutely plunging in the pre-market this morning. That's after surprising investors twice this morning. The insurance giant pulled its guidance for the year. It also named board chairman Stephen Hemsley back to the helm, replacing former CEO Andrew Whitty, effective immediately. Let's unpack this news now with Bloomberg's Cynthia Coons. She leads our U.S. health coverage. Cynthia, we'll get to the guidance poll. I want to talk about the change at the top, though, because it's interesting to see a boomerang CEO here, one that is 72 years old, really underscores...
Alright guys, if you're watching the live stream and you are enjoying the live stream, don't forget to leave a like on the stream, guys. Subscribe if you're new as well. Currently watching EU, well, mainly gold. Want to see EU reach these highs as a final target. We want to see gold push up as well. But we're still waiting for that to, you know, show its hand, whether it wants to hit TP or our stop. If you enjoy this type of content, I provide more of this content for free inside of my Discord. Link to Discord is in the description box down below. It looks like we may get a slight push up. I mean, if we go from here to the high, what is that? It's about, let's say, 45 pips to the high. I mean, it's not bad. It's not amazing, but it's not bad.
That got everyone's attention. But that is not what's driven the drop in the shares over the last month. I mean, they're off 40%, not even considering what we're looking at in the pre-market. What's the problem at United Health?
Yeah, there was a big reaction, obviously,
nice push
after that murder. It was obviously
real nice push, excellent push.
But what's really been pressuring them from a financial point of view,
gold's weak right now, guys, man. It's not really trying to get out there.
Customers in Medicare, and they just haven't been pricing it correctly. And
real
so
nice
customers
push.
are needing more care. They're needing more medical treatments and services than the company has basically budgeted for.
I'm going to take something off of this EU.
They're trying to explain why that might be happening,
Okay,
but the
execute.
explanations aren't keeping up. The numbers aren't keeping up. So the fact that they had to pull their guidance...
Take half that position.
Just a glaring indictment of the fact that they couldn't.
See if we can get a little bit more.
Yeah, and that year-to-date chart really ugly. You saw that big drop in April. That's when they cut their guidance back in April. The shares fell 20%.
See if we can take out that high as soon as we take out that high.
It's definitely been a really rocky couple of months for this company. We appreciate you
Great,
staying
amazing,
on top of it.
cool.
That is Cynthia Coons, who
Let's see
heads
what
up
gold's
the US
doing.
Health Coverage team.
Absolutely nothing.
Meanwhile, let's take a quick check
Of
on
course
the
it's doing
futures.
nothing.
As Matt said, a really little rally in the
Let me
S&P
close
500
that.
right now. It was lower pre-market after that big day that we got yesterday, that CPI report helping to lift futures a little bit back into the green, and we'll discuss the details next. This is open interest.
Gold is literally just chilling. It's a bit annoying, but what can you do? Okay, so we are starting to see that bit of a pullback now. Now that we've taken out the targeted low, right? The low that we were targeting was this low here. So since we've now taken out this low here, obviously overall we want to see us actually get down into this area here. Okay. Now there's going to be pullbacks and continuations and whatnot, but what I do want to take a risk on, right, is this pullback here for the DXY. The accuracy of it has decreased, or shall I say the probability of it has decreased. Wait, I don't need that. I need it for EU. Right, the only problem is I don't have a target for EU that I'm sure on, because the highs have just been taken. But I would like to take the risk on this if we can get it. Alright. I do think this is a decent continuation play forming. So I probably will play that. Right, the probability is lower. Just so that you guys are aware. Why is the probability lower? Because we've taken out the low on the DXY and we've also taken out the high. Let me move that here. Oh no, we haven't taken out the high. Okay, so there's a bit of divergence going on here. Okay, so we can still aim for that high if we can get a pullback down lower.
I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world,
yeah, I want that. I want this setup. I want this setup.
you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
I like this setup. EU.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live.
Okay, let's see. What's gold doing? Doing something else, man.
5 Eastern, only on Bloomberg.
Okay, so what I want is I want both EU and DXY to line up a little bit at least. So dollar is pretty much inside of the candle. EU hasn't got there just yet. I'm gonna wait for that. You guys let me know how gold is doing in the meantime.
Yeah, so as you say, the inflation numbers this morning did come in better than expected. A 22 basis point rise in headline, 24 basis points in core. When we look at kind of the gap between our projections and what we saw in the print today,
She sounds English. Abigail, of course you're English.
was actually on the services side. I think we obviously saw softer kind of transportation services in particular in the print. So I think that was one element in terms of the downside surprise for us. But I think the important thing to note is that when we're looking for the impact of tariffs in the inflation data,
These guys need to cut their rates, man. America needs to cut their rates, honestly.
rose 21 basis points. That was less than we had expected, but it's still the third highest think there are some initial signs potentially of some of the kind of tariff impacts in the data today.
So if you're looking for tariff-related impacts, and to be clear, that's what everyone is doing with these numbers, you can find it when you take a look at specific categories, like you mentioned, core non-transportation there. But when do we potentially start to see that ripple effect, basically to see it in more of these categories? Because it feels like investors are just on high alert.
Don't know if we're going to get this pullback, you know, but we're still here. Obviously, we've got this little 3-minute candle that's holding price right now. What's gold doing? Chilling. Okay.
2018, 2019, there tended to be a 2 to 3 month lag between the tariff announcements and then seeing some of the reaction in prices. I think the key thing to note is, you know, there's a difference between kind of the tariffs being applied in terms of a formal announcement and then goods that are in transit. So there's still goods in transit that won't necessarily be covered by the kind of tranches of tariffs that we've seen.
Okay, he's coming down.
I think the other thing to note is that companies often have inventories, so you might not see as quick a pass-through into prices with companies choosing to kind of rely on inventories rather than immediately passing on prices. And then I think the other thing to think about is just the kind of goods that are being tariffed. For example, if it's an input price, an input good rather than a kind of final demand good.
So as you can see from the divergence or the slight differences between the DXY and EU right now, you know, DXY is above this minute high, which is this minute's low on EU. Can you see how it's slightly lagging behind? So the next thing realistically that we need to think about is, should we wait for EU to drop lower or take the long position on EU based on the DXY? And that, to be honest, sometimes it's a bit difficult to ascertain what's the best choice, right, between the two. That's just how simple it is. But it looks like we're finally getting into the area for EU. Look at gold, man. Honestly, gold, yeah. Ridiculous. Anyways, I'm taking the risk here on EU.
For furniture, for household appliances and housing costs, with the exception of the lowest tier of rents, are expected to go up. How do you see this affecting the American economy? Even if we avoid a recession, isn't that damaging?
Yeah, look, I think obviously our growth forecasts have been marked down.
Alright, I'm in EU, guys.
Baseline, we do expect that this will feed into kind of slower growth in the US economy. And I think the key thing to think about
Gold is just, I don't know, man. Gold is just ruining everything.
We thought that the kind of delta that they would get in terms of
Look at that drop.
would be less than we had seen in
Alright, cool.
years, and this is actually going to offset
Let's reassess gold.
positive delta that we were expecting to come. I think at the same time,
I'm going to leave gold alone for now, due to the fact that I'm in EU. Gold does look like it wants to rally for, go for the lows. So we'll take a look at that at a later date. But for now, EU looks okay.
kind of slowing real income growth at the same time as interest rates remaining a little bit higher for longer, it potentially puts a little bit more pressure on household balance sheets.
Well, Abigail, that's exactly where I wanted to go, because in the past 24 hours, it's interesting.
So new 15-minute candle. Seems as if we can get with this being the low of the 15-minute, push above a little bit, the high, we could head higher for EU a little bit as well. So far so good for EU. I think I entered just a little bit off. What's the price here? 11321 321. Okay.
The expectation would be that the inflation impulse from tariffs would be lower than we had previously estimated. Clearly, with the
I want to see us take out this high here for EU to make this a little bit more comfortable.
other tariffs to come into play, you know, there's still ongoing Section 232 investigations that we're watching kind of closely to think about the potential for kind of sectoral tariffs.
Okay, nice. The main target is going to be that 1-minute high.
Something that is a kind of headwind to kind of inflation.
If we can get that. Does that give me a 1-to-1? Yeah, that just about gives a 1-to-1. Okay, so with this EU, just be prepped to potentially take profit at any given moment. I do want to move stops to entry. I'm looking at a DXY and how we're reacting inside of here. I'm not really liking that all entirely. So what I'm going to do for now is I'm going to put my stop about here. You know, if we're really found a good area for entry, then we shouldn't really be getting a pullback. Right, I do want to see us really push now on EU. If we can take out some of these highs.
Explain to us, we should expect a lot of these sorts of headlines and probably a lot more news when it comes to investments. That is why the Trump administration.
I want to see us engulf this low here on the DXY as well.
Here, and looks like we're just getting started.
Look at all the gold. President Trump has got to feel right at home with all of this gold and pomp and circumstance.
The man does like gold.
We're going to continue to cover this.
Okay, nice. E is looking good. Look at gold. Gold's just wick the low. Just rebounding now. Why does Trump looks like he's sleeping at this meeting? Okay, it looks like we will get that new minute high for EU. I don't want to speak too soon, but it looks like we probably will. Okay, so we're taking one loss on gold. We're currently risk-free on EU. So this continuation model is holding. So far, so good. Yeah, just the only problem I have with this is just the exit, you know? There just isn't a clear exit. Well, other than these highs, but it doesn't give us a 1 to 2 R&R. Because the thing is, I don't know how low the dollar wants to drop today. You know, don't get me wrong, it can still, you know, drop today, but it doesn't mean that it will do it now. It could do that tomorrow. You know, we could reach maybe here, consolidate. Tomorrow morning we pull back and then we go again. Do you know what I mean? So I do, at the very least, want to just secure profits from us taking out this high and also taking out the low on the DXY. Okay, because the DXY is lagging behind the euro a little bit, I'm only gonna look to take off full profits once the DXY makes a new lower low on the M1. But right now, this is good. This is really nice. So if you guys took the EU with me, well done. Just gonna go risk-free everywhere.
That actually matters a whole lot more. It might shock some of your viewers. You're watching the close.
Nice, we're almost there. Almost there. It seems like EU's now lagging behind. No, they've caught up. They're about the same. Yeah, they're about the same. So both of these alerts should go off at the exact same time. Almost there.
Well, Goldman Sachs is lifting its 3-month target on the S&P 500 to 5,900, which is only a gain of less than 1% from current levels. Here's the reasoning, with David Kostin writing, already optimistic market pricing of the economic growth outlook, as well as uncertainty surrounding the
It looks alright.
pending slowdown in economic and earnings growth will likely keep us.
Alright, at these highs, I'm gonna take out 50% of this move. I'm even gonna get ready now.
At Lazard. Ron, it's great to see you in person.
Great to be here.
Market execution. What is that?
Maybe we stall out for the next
3
3 months,
point.
but 12 months from now, they see the S&P 500 at 6,500. So the direction of travel is
35.
high.
Yeah, let's
with
do
the
that.
hold. Does that trajectory seem reasonable to you?
Well, I agree with the volatility kind of muddling through for the next few months, but I'm less optimistic on a 12-month view. I think, it's easy to get excited by a lower than expected CPI print. By the way, you could attribute all of that lower than expected print to airfare and used car prices. But if we really zoom back out, I think April is likely to be a cyclical trough for inflation, with the tariff impact really coming through in the rest of the year. And I think we exit the year with CPI, core CPI around 4%. I don't think the Fed is going to cut rates at all this year, which is obviously different from market expectations. And I think what people are missing here is you're going to have higher inflation, probably higher unemployment, and you're going to have growth. I don't think we get a recession.
Okay.
But I think you get
Nice
US
push.
economic
Nice
growth that
push.
grows to a level below
Nice
2%.
push.
That's not a great environment for equities.
Nice. Amazing. Amazing. Securing half.
On an earnings expectation that might be too optimistic.
Secured half, guys. Secured half.
There are some people
Secure half of your positions on EU. If you took this with me. If you didn't, oh well, you missed out. There'll be another one.
35 basis points. What does that mean for growth, the growth side of the Fed's mandate? Yeah, I think the Fed's going to have a real challenge this year. Basically, you've got a dual mandate that for the last 3.5, 4 years, the Fed said price stability is a precondition for maximum employment. Now, that was a different environment. At that point, they were talking about unemployment at or below 4%. In discussing price stability.
Okay, so yeah. Again, for all of you that are on the stream, again, this is one of 5 models that I provide inside of the online mentoring. Okay. As I've mentioned it prior, like, look, all you need is 1 out of 5 of these models, and you can find profitable moves in the market. It doesn't have to be complicated, right? As I've shown you guys just now. Okay. Before this candle was even printed. Hold on, let me turn this down. Before this candle or this play was even printed, as you guys remember or should know, for those of you that were here, right? I saw this 5-minute candle close and I said to you, like, look, this looks really good for a continuation model. I want to see us not take out this candle's high, and I want to see us get a pullback and then a continuation higher. And as you guys can see, we didn't take out the high, we created equal highs, we pulled back, and we've now had a new high. So everything is played out pretty much to the T. Okay, now again, I don't know how long DXY is going to keep dropping for. That's why I've just secured half of it, and I'm going to try and ride this lower for as long as possible. And of course, for those of you that are interested in finding out those models, you need to get in contact with me either via Discord or Telegram. So for gold is just messing about, because look at what gold's done. It's taken out the low, now it wants to rally. Sick of you, gold, man, honestly. So we've got NYSE open. I'm happy we've been able to cover some of gold's nonsense. Pardon me.
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing.
Guys, gold is rallying, man. Gold is back in profit. Did anyone manage to take that EU with me? Or was it just me taking that EU move? Let me know, guys. I hope you did. If not, no worries.
structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever.
Okay, stock open soon. To be honest, I'm just gonna let markets do its thing. I'm gonna give it an hour, and then I'm gonna take a look at what stock market is doing. But right now, I'm not looking at it whatsoever. Gold's slamming back down. DXY is pushing up. GDX is down.
Opening bells, FN the ticker, and they're celebrating 15 years of their listing on the New York Stock Exchange, in which the stock has climbed more than 2,000% to almost $8 billion in market cap. So some very happy folks there. Down on the NASDAQ, America on Tech is some sort of organization dealing with STEM and kids. Katie, in terms of the stocks to watch, I see UNH getting decimated today.
Absolutely. This is the biggest corporate story of today. That's United Health, sinking in a big way after suspending its outlook for the year. The insurer also named board chairman Stephen Hensley as its new CEO, replacing Andrew Liddy. So sort of a double whammy for investors there. Matt, like you said, more than decimated right now, down 11% on United Health.
And it's already had a rough month, down 40%. You were telling us earlier because they cut their forecast. Now they've pulled it, so losing basically half of their value in 4 weeks trade. Coinbase is jumping, going the other direction. This after Standard & Poor's announced it will replace Discover Financial in the S&P 500 benchmark index. So a real changing of the guard there from an old economy financial to a crypto exchange. I guess make of that what you will, as Bitcoin trades at $100,000. Ron Temple of Lazard is still with us. And Ron, Sonali Basak, our co-anchor, has just interviewed Ken Griffin, and he was making a comment about the fact that maybe you would be better off having held cash.
We might have to
from Liberation.
exit
It's
EU fully,
antithetical to the way we're all kind of raised.
But the thing is, in this 5-minute candle, I want to see this 5-minute candle engulf the previous one. I don't think we're going to come back down to entry. That's why I'm still holding on.
Yeah, it definitely causes some
I don't think we will get back down there, but it is, twerking a little bit.
Having said that, over the long run, we do know that being invested in equities, whether it's public or private, is a better place to be than cash and delivers higher real returns. I also do think at current
we might get that 5-minute candle engulfing.
Credit, you can argue for other assets. But
let's see.
One thing that's interesting is year to date, the S&P is almost back to flat. But don't forget non-U.S. equities. I mean, the DAX is up 27%
Guys,
in U.S.
E's
dollar terms
been pushing up. Even G's been pushing up. And look at what gold's been doing. Absolutely nothing.
There's a world of opportunity outside the U.S. And I do think, even though we're getting this reprieve rally right now because the tariff risk looks a little less bad than it was before, it's still a risk to the U.S. economy. And I think investors would be well suited to look beyond the U.S. and consider other equity markets.
Well, you think about some of those levels that you're talking
GDX
about.
is clapping down.
27% rally when it comes to the DAX. Is that justified? I mean, if you had been doing so well in the DAX right now, would now be the time to take profit, or do you think that there's actually more room to run there?
And I should have been clear, that's in U.S. dollar terms. So about 10 percentage points of that is the dollar weakening against the euro. But I think your point is a great question. I look at the European markets and think this might be a watershed moment for Europe. What we've seen in the last few months, partly in response to the new administration in the U.S., but the German fiscal U-turn, I never thought we would see that, especially after we saw the election results.
I was really
surprised.
I should have listened. I mean, look, I was surprised as well, and this is one of those areas where a lot of people, even those who didn't vote for Donald Trump, say you've got to give, to some extent, this guy some credit, right? These policies, even if you think that they're erratic, if you don't think they're based on solid economic theory, if you think they're volatile and wishy-washy, they still have brought about some some pretty great results. Is the inflation number part of that? Is this still Biden's economy, or does Trump get to take credit for lower inflation, as he does so often on Truth Social?
I think it's a flawed assessment to try to kind of always ascribe a certain macro number to the current guy sitting in the White House, well, sadly, it's always been a guy, so I guess safe to say the guy.
Yeah.
But bottom line is, these numbers largely reflect
Okay,
the
so
legacy, I would
bottom
say, of
line,
Biden, plus some of the early influence of
just
Trump.
repeated
You're
what
in
the guy
that
just
gray
said.
zone, but I think what's
Bottom
gonna
line
become
is, yeah,
clear, the reason
for EU, I don't want to see us approach this low. If we start to approach this low, I'm just going to kill the trade.
I think what surprised people was the tariffs on Canada and Mexico, right? We weren't expecting, by the way, to be fair, Trump did campaign saying he was going to put a 10% universal tariff in, and he did, so none of the
Alright, if we start to approach this low, I'm just going to kill it.
importers front-loaded their orders. And so you haven't really seen the impact of those 30% plus tariff increases on China. That's going to come over time, and that would be clearly ascribed to the current administration because you can connect the dots from policy.
Okay, nice. Got a nice little push up.
Challenge with today's inflation report, used car prices being down a little bit. I think used car prices are going to go up because of tariffs, as are new car prices. We already heard from Ford. Right. Airfares being down, you could argue that's a sign of weakening economy. People buying fewer plane tickets on a discretionary basis. So how do you allocate? Hard to say.
This is a not yet report to steel freight. McKee, I want to bring this conversation back to U.S. benchmarks.
Alright.
You mentioned the S&P 500 pretty much flat on the year, pretty significant rally. What's not flat on the year, even though it's had a big
We're ranging a lot at this level, at these highs for EU. GU stagnant as well. Let's see AU. AU, nothing much is really happening. Let me see. I mean, AU can definitely keep going. GU can definitely keep rising as well. Gold, you see for gold, how I reckon we're going to find success with gold is waiting for volume. For example, last Thursday when we had that mad drop, sniped a little entry here for gold, high risk, got the reward at 2R, exited. You get chopped up a lot inside of here, this price action. This, a lot better, but it's the gap, so there's nothing here. And then inside of here as well, you get chopped up. Even yesterday, you get chopped up. This is all New York session. Right? So we need to see a big move on gold right now and then enter, be volume traders. And I reckon that may give us a little bit more success when it comes to trading gold. Or option 2 is to just have a really large stop loss, okay, and accept the risk that comes with gold. But for now, EU looks pretty good, so I'm happy with that. All right, let's take a look at the stock market, see what's been doing. Okay, before I leave you guys, so essentially we're approaching all-time highs, or pretty much been at all-time highs. Yeah, we are approaching all-time highs on the Nasdaq. I'm looking at the weekly, daily. He's heading higher. Okay, cool. So right now we've got this weekly high that could be a short-term target for the Nasdaq. Okay, above those highs we got this imbalance as well. Now, just from looking at this can actually be an area to give us a short. It can give us a short move down to this gap here, or give us a short all the way back down to like 19,000 for the Nas. Okay, so structure, obviously we can see that the structure on the weekly is bullish since we took out this high, right? If I look at the daily structure is also quite bullish. On the daily, there really isn't a clear area except for, market gap again. We're dropping on the EU. I think we'll be okay, but we're just fluctuating a lot. Nah, man, you've got to stretch. You've got to stretch lower at some point. Anyways, let's look at the NAS. So right now, that is the target, yeah? That 20, let's just say 21, okay? 21K. Right? If we work ourselves through the time frames, what is our significant low? This is our significant low. Why? We can see from yesterday, we had price take out the prior 4-hour candles low. If we head to the hourly, you might be able to see a little bit clearer, right? Once we took out that 9 a.m. candles low, we then rallied. We've maintained this low, and we've now created a new high. Okay, so at some point, I want to see from this low to whatever high we make, we may potentially get continuations. We've still got Tokyo's range, which is from this high to this low, right? I want to look around like 50% of Tokyo's range. So we'll see if we can get any pullbacks. Okay, if we get pullbacks, I'm going to be interested in going long. Alright, we've got a bit of imbalance inside of here. Where's Tokyo? Okay, so this is Tokyo's range. Yeah, we've slowly... Okay, I'm killing EU, guys. Killing EU. Killing EU. Hold on. Nah, I've got to kill it. Alright, I've killed EU. It's official. Killed it. Let me kill EU here too. And you here too. You know what? I'm going to keep you open here. See what happens there. Cool. Gold is on the move. Let me see. Oof, gold is clapping down. Okay. Cool. That's not bad. I want to see some real nice volume here for gold. And so far, if we're looking at it from this morning, we had a drop. We had this range here. Equal lows. We took out the high of the range. We rallied, took out the lows. We've now been inside of this chop for a little bit of time. So potentially... Potentially, guys. I mean, look, I don't want to take any moves on gold just yet. It's not clear still. But it's not bad. I just don't think there's enough here for gold just yet. Right, if I were to force a trade, right, you can look for a potential pullback here. And enter short, put in stop above the high. Right, above this high here, which is about 100 pips. It's not bad. It's actually not bad, guys. Right, you can give gold 100 pips, and then overall target is going to be Tokyo's low. Right, that's not a bad setup at all. It's not bad. Anyways, I can't be upset that I have killed EU, but I do now see EU pushing up. I actually do see it pushing up now. But nonetheless, it's fine. It's not bad. It's not bad at all. But EU is probably going to go up there now. I can almost see it happening now. Anyways, I had my parameters. I said if we start to approach these lows, I'm going to kill EU. And that's exactly what I did. So it is what it is. Okay, so yeah, for gold, that play could possibly happen, you know. Let me see what I'm looking like for the day. So I take that on gold. It's not bad. It's not bad at all.
answers regarding United and the overall overhang to the health insurance industry as a whole.
Is the problem that they're, at this point, being too generous with their payouts? Glenn, is this the issue, that they're not taking in enough in premiums and covering too much in terms of medical procedures?
Basically, yes. So United stated today on a conference call that the medical costs from the newly onboarded beneficiaries within their Medicare Advantage plans are much costlier than they anticipated. They also said that the bidding cycle for next year that sort of begins shortly will be enough time for them to recapture the margins next year. That being said, not enough information is available. And on top of that, this issue seems like it's reaccelerated relative to what they reported in 1Q. And also, United was probably the only outlier outside of the rest of health insurance companies that reported this surprising trends during the first quarter.
Well, Glenn, that's what I'm wondering. Of course, United Health is the largest seller of these health plans, but how do they stack up versus some of their peers when it comes to dealing with these issues?
So before the issues began, basically at the start of 2004 with the Change Healthcare cyber attack, the broader issues, United was the 800-pound gorilla and the best operators within the health insurance industry. Obviously, something went wrong over the last, over 12 months, and it seems like since the beginning of 2024, the company is on the back foot trying to fix things that are falling apart. That being said, obviously, United is United, and the opportunity to fix things is there, especially with the old current chairman and old former CEO taking the reins once again.
Glenn, great to get some time with you. Thanks so much for joining us. Bloomberg Intelligence healthcare analyst Glenn Losev. You can see his research on BI Go if you're using the terminal. Let's get a look now at some of the individual stock stories that we're following today with Bloomberg's cross-asset reporter, Isabel Lee. Isabel, what are you looking at?
We're looking at Coinbase. So the stock is finally going to be added to the S&P 500, which is a big deal. We have a lot of multiple proponents saying that this is a sign of times, really a sign that there's broader acceptance for digital assets. And we've got everyone from Michael Saylor to Cathie Wood really congratulating the CEO, Brian Armstrong. And Armstrong, for his part, made the point that this is a big deal because crypto is about to be in everyone's 401k. So shares are surging there, up by almost 15%. Up next is On. So On is raising its sales growth forecast to at least 28% in 2025. That's driven by strong demand despite the uncertainty. I know that some of the people here are fans of Hoka.
But indeed. You can name names.
One of the people here is a big fan of Hoka.
Indeed. Okay. But this company is backed by Roger Federer, and it's really become one of the top performers in the sneaker world. And it's expanded to tennis, to apparel, and everything. And it's been founded in 2010, but I feel like its rise really just began since the last few years. But still, it's really a big deal. Stifel called the results impressive. Truist said that they handily beat revenue. So good news for On. And last, we're looking at Rigetti. This is the opposite because we see shares going the opposite direction, down by as much as 10%. Rigetti tumbled after missing revenue expectations. Operating loss was also larger than forecast. It did report a profit, but that was really just an accounting gain. So the CEO said that revenue can be, quote, lumpy. He said that quantum computing really continues to be in R&D mode. And the company did notch a handful of contracts this year from the US and the UK.
All right, Isabel, great roundup as always. That is Bloomberg's Isabel Lee. I do want to quickly take a look at shares of Hertz right now, down by about 20%. This is after the car rental company posted a larger than expected loss in the first quarter, pressured by a slowdown in consumer bookings. Revenue fell 13% in the period. You added together shares down 18%. Certainly, this has been quite a volatile company to watch.
Yeah, absolutely. Big surge in the middle of April, and the expectation is that if we see inflation, it's going to drive up the value of the fleet that Hertz owns, right? That's also the problem with Hertz, because they spent so much money buying Teslas that the value of their fleet plummeted. But now that we see less inflation, maybe that's not a great play, so Hertz today is going to be hurting.
Yeah, certainly. I will say Hertz through yesterday's close was higher by about 90% through the year. Obviously, a big chunk of that is coming out this morning. But coming up, the U.S. is set to boost Saudi Arabia's access to semiconductors. We'll take a look